Good morning. You're watching Market Cafe with me, Shreyansi Singh, as well as Vinny Motiwala. And over the next 1 hour, we'll be taking you through news and updates from within the country as well as across the globe. Lots lined up on the show, but Vinny, let's take a look at the international handover coming in today.
Absolutely. So in terms of the international handover, the US market especially, what you're seeing is that S&P 500 as well as the Nasdaq, when you look at both of them, they S&P 500 has managed to see a bit of a gain coming in this, even in futures and even overnight. We've seen S&P 500 gain as well as Dow Jones see a bit of a gain as well. Both of them ended with gains of almost 0.1% in trade. Nasdaq seems like a bit under pressure in terms of overall the handover that came in. Nasdaq was a bit subdued in trade, down 0.3% in trade. Let's look at what actually was impacting in terms of the markets of the US markets when you look at it. So when I'm seeing S&P 500 and Nasdaq futures, they also rose a bit after market hours as well, mainly because of the Nvidia numbers that came in. The outlook is quite strong in terms of overall when you talk about AI growth, outlook on that front. That drove the technology stocks. So Nasdaq actually managed to closed in the red, but after that, the future seems like it's trading on the bit of a positive side as well. Other than that, obviously, what everyone is watching out for also is in terms of the FOMC minutes that has just come in. Some of the officials are saying there's risk to inflation. Progress could still be a bit of a stall that could come in on that front as well. Right now, they're flashing on the screens as well. Most officials noted that the risk of cutting too quickly is still there. We've heard a lot of commentary that has come around that part as well, that, in concerns around that. If you cut too fast also, that's also a concern in terms of the rate cuts as well. So you should be very cautious is what most of the commentators even highlighted when you read the commentaries that have come in as well. So yes, that's the latest update that is coming from the US markets as of now. When you're looking at European markets and where they closed as well, let me just look at that. CAC, FTSE as well as DAX. So CAC and DAX actually managed to close in the green, but FTSE seems like a bit of a struggle on that front as well. FTSE saw a bit of a sharper decline, and other than that, when you're looking at it in terms of individual shares in the European market, HSBC, that was the one that deserves a mention because that fell over 8% after reporting a drop in terms of its pre-tax profits for the December quarter, and that is one concern that came in on in the European markets as well. Stocks 600 index, that also ended bit lower. You could say a decline of 0.2% as well. So yes, that's how it is looking like in the European markets as well. You could say a bit of a mixed close that came in from the European markets, but what indication came in from Dow futures as well as overall the US futures, slightly positive side, bit of a rise. As of now, you can see that Nifty implied also indicating a positive start for the Indian markets. 100 points up as of now is what the Nifty implied is trading at. So yes, maybe Shreyansi, we are waiting for one more record high open because yesterday it opened up at a record high, but after that we saw a fall coming in. So it's going to be interesting to see how the markets are going to be moving today in India as well.
Absolutely, it does look like that, Winnie. But let's take a look at oil also then. And crude oil futures rose, and this was as Federal Reserve officials indicated that interest rates have likely reached their peak. More on that later. But when you look at the move coming in for crude, when you're looking at the WTI contract, you're looking at gains of about 1.1%. It settled around that $77 a barrel mark. And when you're looking at the Brent contract as well, you're looking at gains of about 0.8% thereabout. And that contract settled around that $83 a barrel mark. Lower interest rates typically stimulate economic growth, which fuels crude oil demand. Now, tensions continue to also simmer in the Middle East as well. And this week, after Israel also launched airstrikes against Hezbollah in Lebanon, Houthi militants struck another cargo vessel this week. And as Iran now blames Israel for explosions that hit a natural gas pipeline in the Islamic Republic on Feb 14th. So those are some of the developments that we've seen coming in that have also played out in the oil markets as well. But when you're looking at gold prices inched up, and this was as the Middle East conflict boosted safe haven demand for gold, and also as minutes of the latest Federal Reserve meeting dampened hopes for an early interest rate cut. So that is how gold prices are looking at this particular development, Winnie.
Absolutely. Unfortunately, that's how commodities are also looking like right now. But Shreyanshi, we have a lot of interesting events that one should watch out for as well. Earnings is over, but still a lot of global data points as well as domestic data points. So today we should watch out for in the domestic market. One is the minutes of the MPC meeting. On the global front, in the US, let's watch out for the initial jobless claims. That's important, as well as the crude oil inventories. That's going to be important to watch out for in terms of the inventories that are there in the US, because that is an impact that is happening because of the Red Sea. Any issues on that front in terms of inventories, that's a key to watch out for as well. Other than that, let's just watch out for some of these corporate actions that will be happening in India today. So in the domestic market, Mass Financial is set to trade X bonus in the ratio of 2:1. So we're keeping an eye out on that. Last day to be eligible for dividend of HSBC. So keeping an eye out on that. Let's track what the Prime Minister is doing, because he will be visiting Gujarat as well as UP over the next 2 days. That's Feb 22nd and 23rd is where he'll be making visits in these two states as well. Other than that, US Federal Reserve minutes, which we just read right now as well. So yes, that's something we're watching out for, because that is a key note factor that comes in terms of the minutes of the meetings from the FOMC that happen. That's important to watch out for, even for the Indian as well as the US markets. You get an indication in terms of rate cuts, and right now also the risks that they've been highlighting. So that's a key factor that one should keep an eye out on. Other than that, in terms of the ECB issues, an account of Jan 25th meeting as well. So yes, keeping an eye on that one. These are important factors that one should watch out for in today's trade. But yes, a lot of corporate actions that one should keep an eye out on.
Absolutely, and as promised, let's take a look at what the Fed minutes had to say. Even as the clamour for rate cuts grows, Fed officials remain wary of moving too fast. The latest meet minutes showed that officials expressed both optimism and caution on inflation. They also believe that rates are likely near their peak for the current tightening cycle, but said that it would be appropriate to start cutting rates only once they observe that inflation was decidedly moving towards the 2% target. Remember, the US Fed kept its interest rates steady for the fourth straight meeting in January, in line with expectations. However, Fed funds rate remained near a 23-year high.
Okay, let's move on to the next one, and an important one like I spoke about before as well. Nvidia that reported its numbers. The AI revolution is not just a buzzword, and this is despite the skepticism over Nvidia's earnings and the doubt that it could keep up with expectations. The giant actually has once again reported a stellar set of numbers in the fourth quarter, that's the December quarter, with revenue soaring more than 260%. But that's not all. Nvidia predicts its revenue will triple yet again, and thanks to the boom that we're seeing in AI applications, its profits have jumped ninefold. And the CEO noted that they are at a tipping point for AI, and the company's share rose more than 10% after market hours. So clearly, good earnings beat coming in from Nvidia, keeping the stock abuzz even after that as well.
Absolutely. Let's keep it with global earnings then. HSBC shares saw their worst day in more than 3 years after the bank's profit fell 80% from last year on the back of a write-down in its China business. Although its pre-tax profit jumped sharply, it was below estimates, and the company's guidance has raised concerns, with some analysts saying it's unclear. Back in Australia, Qantas Airways is seeing a lull after the post-COVID boom as its profit dipped amid lower airfares, yet the company gifted its shareholders with a $260 million stock buyback and promised more spending on customers to fix its reputation.
And some update coming in from Israel, Palestine, and Israel continued to intensify its bombardment of Rafah in Gaza, but even as a resolution was called in Security Council calling for a ceasefire. Once again, the US vetoed the resolution, which was backed by 13 of the members, with the UK abstaining, and the conflict has more than 29,000 people dead in Gaza, according to the Palestine Health Minister.
And the G20 summit has kicked off with the backdrop of geopolitical conflicts across regions. As Brazil started its G20 presidency, it called for a reform of the United Nations, citing its inability to deal with current challenges, especially in the light of Israel's attacks on Gaza and the continued war in Ukraine. Ministers from the G20 nations, including the United States and Russia, began a free discussion of current world tensions and ways to improve multilateral organizations, but diplomats are not optimistic that proposals to upgrade global governance will advance easily within the G20.
And the super luxury car maker Lamborghini is bullish on India at a time when many global markets are staring at a recession. Now, after selling a total of over 100 cars in India, the Italian company is looking for the second phase of growth in the country. ED Now Sumit Chaturvedi caught up with Lamborghini's global chairman and CEO Stephen Winkelmann and on India's plan, what is the growth outlook going forward as well. So let's listen in.
We had an absolute record high in terms of deliveries to customers last year of 10,112, which is also reflecting into the Indian market with the 103 cars, which is the first time, as you said, over 100. The market of the luxury market in India in terms of automotive is relatively small, or it's more or less 1,000 cars. So the share of 100 is a really big one, and we are very happy about that. So let's say the reception of our cars is very positive here in India.
But one thing we keep on hearing is that there are not enough cars for India. Customers have to wait almost for a year to get their car. What's behind that, and when is it going to be? Is it a happy moment for you, or you are a bit disappointed with that?
No, I think that this is the right way of dealing with our type of business. You have to have a balance between, let's say, the demand, and we always have to produce less than demand. On the other side, let's say an order bank which is a bit more than a year is very healthy for a company like ours. And we are in constant contact via our partners, the dealers, like here in Delhi, with our customers, and this is not, for sure very important. But on the other hand, our cars are an investment, because if you resell a car, usually you get a higher price than the new car price. And this means that it's a brand which is very valued, and we are watching and monitoring very carefully the development of the used car prices, or the residual values of the car, but also in general the value of the brand and the company.
And when you come to India, what's the feeling now? You have been coming to India from last many years. How have you seen it growing over the years? You bullish on Indian economy?
I think the Indian economy is stable. Now the outlook also for the next years, even though there is an election in front of us, it seems a positive one. So this is good for the economy. It's good for our type of customers, so that they can plan and have an idea. So I see, if there are not major changes globally, that the economy is further improving. Now you're the fifth one worldwide, which is huge, but I think that there is much more to come in India.
And we have seen you investing in the Indian market from last many years. Is it one of the profitable ones across the globe for you? And if yes, what's the...
All our markets have to be profitable, otherwise we would not be here, because we have high investments. Now when we develop cars, we have let's say a life cycle which is pretty long. We have low volume, so this magical triangle has to work, because otherwise we would go out of business. No? And therefore technology is very expensive. We need this critical mass to reinvest in the future, so we need to be successful to continue to build dream cars.
And since the whole world is moving towards electric cars, now definitely you have plans, we all know about it. But you think that when we started talking about electric cars, they're growing slower. What's the outlook overall across the world? You think that electric cars are really eating into the share of ICE, not just for your segment, but across the globe in mid-level, upper luxury?
Starting with our segment or with our brand, we have the first step is to hybridize all the lineup, and which is very much accepted.
Well, that was quite the interesting conversation, but with that, we're timed out on this segment. We'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. And Japan's Nikkei hit record highs with investors shrugging off dismal business activity data from the country. While when you look at other Asia Pacific markets, they traded mixed. But let's take a look at Nikkei first. Nikkei hit a new record high, surpassing the previous record high reached in 1989 and was up around 1.4% as it opened. Right now, it's up about 1.5% as well. And this is as investors assess Japan's Jibun Bank Flash Purchasing Managers Index reading for February that showed business activity contracted yet again. But clearly, the market is shrugging off that. And when you look at ASX 200 as well, that is trading, that traded marginally lower. Right now, down in the red, but not doing all that much. And this is as the nation's Judo Bank Composite Purchasing Managers Index showed a return to growth at 51.8. The 50 mark separates growth from contraction. So that's an important update coming in when you look at Australia. But when you're looking at Hang Seng as well, that is also not doing all that much, but in the green, they're about like 0.2% up, 0.3% up, but not decidedly higher. But when you look at Kospi as well, that opened higher and that was up about 0.3% as we speak. And when you look at the updates coming in from Korea, the Bank of Korea is slated to announce its interest rate decision later, with economists polled by Reuters expecting the bank to hold rates at 3.5%. So that will be something that will be key to watch out for when you look at Kospi as well. So let's see how that pans out. But when you look at Nifty implied, you're looking at a positive open this morning, Winnie.
Absolutely, that's a positive open. Clearly, indication as of now is coming in from the Nifty implied. Let's see if it sustains, all through the day as well.
Welcome back. Thank you so much for staying tuned in. Well, in some relief for Baiju's, Karnataka High Court has passed an order stating that any resolutions proposed to be passed in the 23rd February EGM called by select investors as invalid until the final hearing and disposition of this petition. Anurag Joshi is on the phone line with all of these latest details. Anurag?
So the Karnataka High Court which was sought to be called by some shareholders, key shareholders who own a significant shareholding in the company. And one of the key demands of the shareholders is the removal of Baiju Ravindran as the CEO of the company, and Divya Gokulnath and Riju Ravindran, who are directors too. And what has triggered this EGM, this call for the EGM, has been firstly that Baiju's has been delaying the declaration of its earnings. So it was supposed to declare that FY22 earnings in September, and there was a delay. And when the final numbers for FY22 came, it was in January. And the FY23 results are also yet to be declared. And in the FY22 results, Baiju made a loss of 8,200 crore rupees, which is almost $1 billion. And and some of the investors that were seeking removal of Baiju Ravindran include General Atlantic, Chan Zuckerberg, Peak 15, and SCI Investments.
All right, thanks Anurag for those details. Let's move on to an ET Now exclusive then. India is poised for 24/7 bundled clean energy in the next couple of years, and that's the word coming in from Tata Power CEO Praveer Sinha in this exclusive conversation with ET Now. He also spoke about how AI has helped the company cut technical and commercial loss of electricity from 53% to just 6%. Listen into a slice of this exclusive conversation that he had with your channel.
So I think a very strong foundation has been made in last few years in the clean energy space, and you would see that this will get enhanced in 2024 as well as for the rest of the decade. Country has very ambitious plans to add nearly 300 gigawatt of clean energy between now and 2030, which means that we will add nearly 40 gigawatt every year. Our run rate in the last 6-7 years was 15 gigawatt. So I think what you would see is a huge amount of capacity addition in clean energy, and also I think we are now transitioning from just pure solar and wind to 24/7 clean energy solutions. So you will see whole lot of clean energy solution which will be bundled power of solar, wind, storage, battery storage or pump storage, demand response. So I think this is a very exciting time for clean energy solutions.
We're at the NASSCOM forum, and here you also spoke about, and I believe AI has also been incorporated. It's like salt in every industry right now. What exactly are the implications, and what kind of AI usage is Tata Power sort of using to ensure efficient energy consumption, etc.? A word on that.
So we have been using AI for last many years. In fact, I would say last 10 years. And this we use typically for managing the grid and also doing better predictability, because the consumption of power depends on the weather conditions. And we use AI for predictability of the weather, as also the consumption patterns changing based on the weather.
All right, moving away from that exclusive conversation then, Finance Minister Sitharaman held the Financial Stability and Development Council meeting. RBI Governor, SEBI Chair, PFRDA Chair were some of the key attendees. Sumit Chaturvedi is here with all of the key takeaways. Sumit, what were the key discussions that were held?
It was a crucial meeting today, which was 28th of this kind, and it was the first after interim budget was announced on Feb 1st. Well, overall, the situation was discussed as far as the macroeconomic indicators are concerned. It was, in a way, meeting was there by FOMC Thurman to take stock of the whole overall economy. It was attended by regulators, including SEBI chairperson, including PFRDA chairman, and also secretaries from Finance Ministry's side, including Revenue Secretary, Expenditure Secretary, and Finance Secretary as well. So what was discussed was overall situation as far as economy is concerned. Financial inclusion parameters were also discussed. So we can talk about also what kind of overall measures being taken so that illegal apps as far as loans are concerned are functioning or not. That was also discussed. What was discussed is overall situation when it comes to financial conglomerates. How strong are they? So these were all discussed. These parameters were discussed in the meeting today. It was FSDC, which is Financial Sustainability and Development Council meeting. The meeting happens at regular intervals, but this is coming at a time when there are certain points of concern as far as global economy is there.
All right, thanks Sumit for those details. Moving on to some important commentary coming in then. Uday Kotak has made it clear that he's not a big fan of cryptocurrencies. Talking at an event, Kotak said that India does not like cryptocurrency. However, he believes that central bank digital currency will prove to be a game changer for financial services sector. Listen in to what else he had to say.
I think India's position is clear. India does not like crypto. I think bottom line is irresponsible central banking, particularly in developed markets, is the biggest risk for alternative assets to get more important. I think central bank digital currency has tremendous legs. It has to get customer utilization. It can be a very big positive, but it will dramatically change how financial institutions will work in the future. It will still not get away from the fact that you will need an intermediate for risk management.
All right, well, that was important commentary coming in from Uday Kotak. Keeping it with the commentary then, Sanjeev Bajaj, Chairman and MD of Bajaj Finserv, highlights the transformative impact of public investment and infrastructure on the economy. Listen in to what he had to say.
So it's really the public investment in infrastructure that has helped us ride along, but that has a multiplier effect for the economy. More cement gets sold, more trucks get sold, more employment is generated. These all become consumers, they become investors, as Uday was saying. What is dramatically changing beyond some of these more traditional levers? One, the digital age. India now has a chance and is innovating for the world. We are no longer followers. We are not copying what was done in the West because the West has been innovating for 100 years. We will create the right digital infrastructure which will be free to use. The fact that the world is saying that they want a great alternate source and is looking at India for that, for manufacturing.
All right, moving away from important commentary then, unclaimed amount has been a concern for the insurance regulator to ensure that unclaimed amount reaches the recipient. IRDA has amended the master circular on it. Anurag Shah is joining in with more details. Anurag?
So unclaimed amount in insurance sector is increasing. We have seen in last few years. So insurance regulator IRDA has amended the master circular related to the unclaimed amount. So according to the new circular, now there will be some accountability for agents and intermediaries. Agents and intermediaries are supposed to trace the beneficiaries related to unclaimed amount. There will be a regular updation of policyholders 6 months prior to the maturity. Insurance company is supposed to send information to beneficiaries about their renewal or about the maturity of insurance policy. Apart from that, automatic validation of mobile number and email ID is also which IRD has suggested to insurance companies. And to calculate the unclaimed amount also, the formula has been changed. Now any unclaimed amount which insurance company is not able to disburse due to a particular litigation or account is freezed by a government agency, so that will not be counted under the unclaimed amount. There will be a separate head that will be under the separate head of litigation and freezing account, that will not be the part of the unclaimed amount category. Other than that, policy related to the annuity policies, if after the maturity claimant is not claiming unclaimed amount, that will also not be the part of unclaimed amount. So these the IRD insurance regulator IRD has amended the master circular. In that master circular, there will be accountability for agents, intermediaries to trace the beneficiaries. To insurance companies are supposed to update their database regularly on the renewals. Also, to validate the mobile number in email, so on time they can transfer the money in which is unclaimed to the policyholders.
All right, thanks Anurag for those details. On to an interesting update then. India's challenger to take on OpenAI's ChatGPT may be rolled out as soon as March. Bharat GPT Group's AI chatbot dubbed as Hanuman was modeled at a tech conference in Mumbai. The video demonstration showcased the bot's expanse over languages and subjects. According to Bharat GPT, the chatbot model will work in 11 languages and 4 fields. IIT universities have collaborated with the group too to make this feat possible. The group is also backed by the Indian government and Mukesh Ambani's consortium. So that's about the interesting AI update. But with the current market sentiment flip-flopping between record highs and choppiness, we at ET Now took it upon ourselves to look at pockets where investors are seen booking profits. After the stellar run in the PSU and consumption pack, select stocks have gone into correction mode. In fact, my colleague Sharat has broken all of this data down into granular analysis to put the moves into perspective. Sharat, take it away.
Well, yes, in our analysis, we are taking the 2023 high flyers who have given us strong returns, and now there has been a correction coming in from their recent highs. Up first, we are having the consumption names, and if you look at the stocks such as Jyoti Labs, Safari Industries and Polycab, they actually gave investors double their returns. But now there has been significant corrections, and of course, Polycab had come because of cases on the taxation issues, and also the Q2 and the Q3 numbers we see, that is where the consumption patterns did actually get impacted. And of course, important reason being there has been a brands and Khadim also make it to the list where they had given significant returns to the shareholder, but now they are seeing corrections. Also, apart from that, Imami comes to the list in the FMCG pack, and ITC also makes it to the list where they give a strong returns to the investors ranging between 32 to 40%. But now they have seen corrections. Now we spoke about the consumption names, but in the PSU pack also, there are two segments which saw a very strong rally, especially the power segment and the railway segment. And there are certain names which gave very strong returns to the investors such as REC, PFC and IRFC, which actually tripled the wealth of the investors, and also closely followed by Mazgaon Dock and RVNL. But now there has been correction which we have seen 2 weeks ago, and from the fall of the recent highs, the stocks are down by more than 10%, but a little bit of bounce back has happened in these segments as well.
All right, thanks Sharat for that very interesting update coming in. But with that, by time out on this segment, we'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, the Maharashtra government had agreed to revive the wine industrial production scheme for 5 years from financial year 24 to 28. But what does the resolution say and how is it going to affect Sola as well? Ashesha is joining in with all of those details. Ashesha?
Well, yes, just to give you a brief background, it was on the 4th of January when the government said that it will be reviving WIPS or the Wine Industrial Promotion Scheme, and the stock has run up nearly 12% since then. This was a positive and hence the stock ran up nearly 12%. Now, according to the scheme, Maharashtra government levies about 20% VAT on wine and about 16%, that is 80% of 20% is refunded back to wine manufacturers, and hence revival of the scheme was a positive. But now fine print of the scheme suggests that for FY 21 to 23, Maharashtra government will be refunding the incentive, but for the coming years, that is for FY 24 to 28, the maximum incentive will be capped at 20 crore per annum per wine manufacturer, and hence this is a big negative for Sola. In fact, analysts also say that this will lead to reduction in revenue estimates by as much as 30 crores, EBITDA estimates by as much as 22.5 crores from FY 25. This translates to about 4 to 5% of its total revenues, 13 to 15% of its total EBITDA, and 20% of PAT for FY 25, and hence this is a major negative. So for coming years, that is for FY 24 to 28, the maximum incentive will be capped at 20 crores per annum per wine manufacturer, and hence Sola will be in focus on the back of this negative news that has come in.
Okay, so Sola will remain in focus, and that's about Sola, but there's a host of brokerages that have come out with their notes this morning, Ashesha, as well. So help us with the key takeaways from some of these.
First up, let's talk about Bernstein's note on PSUs. First up, they've spoken about valuations, that the valuations look expensive. PSU index is currently trading at 11.2 times forward price to earnings. Momentum and dividend yield will still have room to go, but valuations continue to remain expensive. They say PSU portfolio is still trading below the historical mean, at least relative to the broader market. So valuations are expensive, but there's still room left to go for PSU stocks. We also have a note that have come in on electrode manufacturers from Jefferies. The note is on HEG and Graphite, that only two listed electrode manufacturers in India, where they've retained buy stance on both of these counters, but they've revised the target price upwards. For Graphite India, it now stands at 650 rupees per share. For HEG, it stands at about 2,300 rupees per share. They say they are cautiously optimistic for FY 25 for both these counters, but decarbonization stays a medium-term tailwind, and hence they have hiked their target price on HEG and Graphite India. Lastly, Paytm, a counter which has been in focus for the last many trading sessions, and Goldman Sachs has come out with a note where they are retaining their neutral stance on the stock. They've gone ahead and lowered their target price on Paytm to 450 from their earlier target price of 860. So they've nearly halved their target price on Paytm. They say they are reducing their FY 24 to 26 revenue estimates by 36%, adjusted EBITDA estimates by nearly 80%, and they say that FY 25 revenues are expected to decline by 21% on a year-on-year basis versus 16% growth estimates earlier. So drastic increase in target price to 450 from their earlier target price of 860, and on the back of this report from Bernstein, Paytm will also be in focus today.
Absolutely, Ashesha. So we'll be keeping an eye on all of those counters, but let's just shift focus to sugar companies then, as the fair remunerative price has been increased by 8% for 2024 to 25. What impact will it have on the sugar companies? Sharad is here to analyze the positives and the negatives of this news. Sharad?
Well, it's a move coming in from the central government, and importantly the sugar stocks would be in focus as the FRP, which is called the fair remunerative price, that has increased by 8%, coming in at roughly 340 rupees per quintal, and this is for the next season as well. And importantly, last year also the FRP was raised, but the amount was lesser. It was roughly 10 rupees per quintal. And importantly, the basic recovery rate, that remains unchanged at almost 10.25%. But what's the impact? Sentimentally, it's expected to be negative on the sugar stocks. But do remember, most of the sugar stocks actually guided by their MSPs also, which are coming in from the state level objectives. Also, this is a populist move that analysts are stating just ahead of the elections. And do remember that the sugar season, the next one starts in the month of October. as well. So sentimentally kind of a negative news flow might be coming for the sugar sector, but overall the impact seems negligible currently. But remember, there are two sides of the coin for the sugar sector, and of course the first one is that the state-wise crushing data is the data which we looked at, that has been growing and there has been a significant improvement in the sugar production. But on the underside, because of the highest sugar production, what has happened is higher crushing is also there, and that could actually put a downward pressure on the sugar prices as well. So sugar industry itself is kind of having mixed signals currently going ahead into the elections.
All right. Thank you so much, Sharad, for that update. But with that, we're timed out on this edition of Market Cafe. From me, Shreyansi Singh, as well as the entire team that put the show together, thank you so much for tuning in.